Hello, this is Dean Malone with Compass FX. Hope you're doing well today and you're getting some good trades. In a previous video, I talked about why chart patterns don't always work. Yet I'm reminded today as I look at the charts that history has a way of repeating itself. I just did this video previously about the Aussie dollar. We saw a double top pattern in the price action. We were looking for the average price bar to come down and close below the price action channel and show a potential move back down of about a 38.2 to 50% retrace back down, possibly into this area right here. We also saw in the TDI the potential divergence, this negative divergence showing right there. So the market was planned for a potential fall back over, but that's not what happened. What ended up happening was the market made a push on up. The market wasn't ready to make the move down. And as a retail trader, we often have to remind ourselves that the market's going to do whatever the market's going to do. It will make its move when it makes its move. Because eventually, the market did roll over. And if you take a look at what happened here, the market made a move on up to a level, and we eventually make a move of a 618 retrace. If we drop this fib level down to the high that we were looking at previously, you can see that the market actually did fall back down to 38.2 and the 50% as we had anticipated. Now I know some of you are sitting there going like, dadgummit, Dean, I've seen it do that to me too many times. It does what I expect it to do, but I get stopped down and I'm out of the move, and then the move happens as I thought it would do. Well, that's just part of what Mr. Market does to us. That's what it's designed to do. It's designed to take us out of the market, collect our stops, and then go do what it's going to do. Oftentimes I tell folks what you could do is use a lower leverage in your trading and extend your stops out and give the market a little bit of room to breathe. Well, what I want to share with you today is that we saw this same thing happen today, but in another pair. The pound dollar had a similar setup. Instead of a double top, today we see a triple top in the pound. We even see it pin high, thinking it's not sustaining a move above 160. And the thought is it's going to come back down. And we see also, again, negative divergence happening. We see the potential break across the TDI. However, in each one of these situations, we never get an average price bar to close below the price action channel. And then I go out to the pound dollar, just like I mentioned in the previous video on the Aussie dollar, we go look at the 1 hour chart. And if we take a look at this, we can see that the average price bars are above the price action channel. So I'm reminding you to, if you're trading the synergy model, to double check the price action channel on a higher time frame. Look at what the average price bars are at in comparison to the time frame you're trading. In this case, they're above. Now, where's this pound going at this point? How do we play Mr. Market here? Well, the way I look at it from this standpoint is the fact that we have 1, 2, 3 steps up. And this was a pretty big step right here. I'm thinking that what's up above? If I step onto the 4 hour chart, we can see that back on April the 2nd, we had this high back here at 60.60. There's a possibility the market heads up to 60.60 level, faced with offers up there. After coming off of a triple bottom, it made its way back up to the previous high, and then we get a bounce off of that. You can see here the TDI is still working its way up. Notice also on that 1 hour chart, we were still kind of working our way up ever so slightly. Not the best look, but that 4 hour has a very strong look. Now, thinking out a little bit larger, look at the daily, there's the possibility of the pound dollar going up to 61.64 level that we had back in October of last year. If I look at the average highs and the average lows back here, it looks like there's a possibility that the market could go somewhere right between 6100 and 6120, and it'll be faced with offers again up here to drive it back down. And look at this. Take a look at what the market's doing here. You can see that the market's making a play to the upside in price, but look what's happening in the TDI. A high peak right here, but yet divergence. Even though we're pushing up against that divergence move down, we have negative sentiment building on the pound dollar. My thought is that the market comes back down and possibly settles somewhere on top of this level. That would bring the pound back down to an expected 157 level. But we may not see 157 until we see 161, and then we play into a new range. That's the possibility of the market right here. My reasoning for doing this video today is just to remind you that there are times that the market repeats itself. And the pound dollar today did almost exactly what the Aussie dollar had done previously. And we learned from that previous lesson. So my thinking is, again, we're way up high here. The pound dollar's pretty high as well. You kind of see this double top situation possibly happening and the market baseline of the TDI. And the 4 hours getting up there pretty high as well. Now, the market baseline still is sloping upward in the 4 hour. So there's still the possibility that we get up here. We might linger from 60 area. We might push all the way up to that 161 level, then fall off. So just be prepared for that. So take the lesson in mind that history has a way of repeating itself, that technical patterns don't always work out the way we plan because the market's just not ready yet to make the move. But eventually, if you're patient enough and you're using the proper money management, and sometimes you have to give the market a little bit more room, but eventually the market may work out the way you had expected it to work out. Well, folks, this is Dean Malone with Compass FX. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.